Nigeria's equities market extended gains for the third consecutive session this week, driven majorly by insurance and the oil and gas stocks. And I have Fajimolu, the Chief Research Officer at Blue Vertex. He joins me now as we look at what's driving sentiment in the equity space today. Thank you so much for your time on the show today, Dari. And let's get into what we're seeing play out here for the equities market.
Thank you for having me, Kenneth. So what we're seeing in the equities markets is essentially what is going on is the market is trying to find its support level from the high positions that it ended last week. Last year, basically. So towards the end of last year, starting from around September, we saw a situation where the market maintained a spike all through the rest of the year. So ending the year on that high note, the market is essentially finding a new support level. So that's essentially what we see. The market is going to be trading over this. The trades in the market will hover this particular position for a while. So it's not expected. It's not surprising actually.
All right, looking at how the sectors are performing today, we're seeing insurance stocks up about 4% today. What's playing out with investors there? We know the last we heard there was the recapitalization drive that's going on in that sector, but what's playing out today?
So essentially, it's still the recapitalization drive that is behind the activities we've been seeing in the insurance sector even till today. What we see is that most insurance companies up till now have tried to go at it on their own, as against the usual practice of mergers and acquisitions. So we've not seen a lot of that, but I think that is we'll probably see some of that as we approach the deadline for the recapitalization. But what we are seeing in the meantime is that insurance are trying to go at it by themselves, and in the process of that, it's triggering some activities in specific names, and those are the names essentially driving the sector, or rather lifting the sector, and then others may as well ride on it.
All right, market is up about 0.11% here, and we're looking at some of the top gainers here. MOBIL coming in that space, even SEPLAT, BOCGAS, FLOURMILLS, and GUINNESS Nigeria, all on the top gainers list today. Let's look at the oil and gas stocks, and we're seeing that resurgence in the oil prices. How is that playing out here with sentiments for the oil names in the Nigerian equities markets?
So definitely upward movement in price of oil is good for Nigeria, because Nigeria essentially is an oil dependent nation, and more importantly perhaps is the fact that a significant portion of our reserves depends on oil as a source of depends on oil revenue as a source of inflow to maintain the national reserves. So when oil prices are up like that, it is very good for the country, and also it ensures that the international transactions are also able to be supported because of that. However, we know that domestic investors now dominate the market up to as at November 2020, which was the latest data from Nigerian Stock Exchange. Domestic investors accounts for approximately 79% of the portfolio transactions that happened in the market. So yes, on one hand, the oil prices are good and supporting domestic markets, especially the likes of SEPLAT and co that are into the upstream, especially. So it's a positive development for us.
All right, now in a couple of days, we'll be expecting the National Bureau of Statistics to come out with the new figures for inflation for December. And I'd like to understand how you see the sentiments that will play out with some of the major names we'll see in the consumer goods space and sectors that could be affected by these numbers.
Okay, so in terms of inflation, we definitely expect an upward movement in inflation. Primarily, December is like the peak of the festive period. So there will be a lot of activities. Prices usually go up in around that period, and where December is the peak of it. So that's on one hand. Then also the macroeconomic variables support upward movement in inflation. We have high cost of transportation, higher cost of electricity, and so on. So inflation is likely going to move upwards, and consumer space is going to be affected, especially because it's when inflation goes up, essentially, it's reducing the purchasing power of consumers, which limits the earning potentials or the revenue potentials of the companies in the consumer space, the likes of Cadbury, Nestle, and the rest of them. So that is one sector that is actually going to be affected. And of course, it's not going to be limited to them because inflation prices affect all the economy. So it's not just them, but essentially those are that's the sector that is usually most affected by inflation.
Right now, but I'd like to get what your outlook for monetary policy is going to be. We're going to have the first meeting later on in January, and I want to know how you could see those sentiments play out in the equities space.
I think the MPC, the outcome, I don't expect much changes from the MPC because it's, I think it's just, it will be prudent to wait and see a little bit how the economy plays out, because we are just coming out of a very tough year. And don't forget, Nigeria is still in recession. And also, as we just discussed, high inflationary environment. So I think it will be good for the MPC to take a wait and see approach, first of all, before making any strong change in the rates. Because if the MPC makes changes too quickly, it is going to increase uncertainty, because that is going to affect planning from the perspective of the companies. I remember this is January when most companies, if not all companies, are still trying to perfect their plans and strategy for the rest of the year. So making a strong adjustment to the MPC rates, I think it's not advisable, and I think it's better to just take the wait and see approach. And that's what I think the general sentiment is.
All right, now in the past couple of years, we've seen that the January has always been a good month for the equity space. We always see the market rally at the first instance in the year. Do you think we're going to see those sentiments play out this year as well?
Well, it's tough to say, but so far we've seen an upward movement in the market so far this year, and that is already showing it's in line with what you just said. But what I think, I'm not sure that is going to be repeated this year, because like I said earlier, we are coming out of a very difficult year, even though the stock market had a good year in terms of the capitalization of the market. So the question is, can the market sustain that momentum, and at what point will it become a bubble? So those are factors that savvy investors will be considering. So it's not even if the investor is cash rich at this moment, I think it is better to take a little wait and see approach. Definitely, we know that in the first quarter, there will be certain factors that will drive the market, like the full year results of companies that will be released during this quarter. So that's a factor. But in the absence of any major catalyst, it's better to study and observe the market and understand, so that you don't just enter into a bubble.